Hey, what's going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and today's video is going to be shocking. We are going to be talking about how, according to CNBC, the average mortgage payment on a home has risen to $1,826 per month. That is the highest on record. We're going to be watching a short clip from CNBC that talks about it, and then we're going to discuss the impacts on the housing market. Now, if you are new to the channel, please consider smashing that like button and tapping that subscribe button right there. And if you haven't done so in the past, please consider commenting. It really helps me learn and grow, and it helps others learn and grow. Without further ado, let's jump right to that video clip.
And yeah, rates took a sizable jump higher at the end of last week, basically adding insult to injury in the heart of the spring market. The average on the 30-year fixed hit 5.64% on Friday. That's just over 2.5 full percentage points higher than a year ago, as in we were in the very low 3% range last year. Mortgage rates loosely follow the yield on the 10-year Treasury, which spiked to over 3%, but rates are also taking a hit from the Fed unloading its balance sheet of mortgage-backed bonds.
All right, so she's absolutely right. There's a couple key points that she made here. Number one, we have seen the 10-year Treasury yield go up over 3%. Mortgage rates are tied to that. When the Treasury yield goes up, rates go up. When the yield goes down, the mortgage rates generally come down. But in addition to that, the Fed is going to be reducing its balance sheet, and they have announced that they're going to start tapering and reducing the amount that they're buying as far as mortgage-backed securities go. Now, they are talking about a sizable shift in that coming up here in August, somewhere to the tune of $35 billion per month in tightening, which is probably going to put additional upward pressure on interest rates. So it is quite possible that moving into these summer months here, we see mortgage rates go even higher.
Home prices are 34% higher than the start of the pandemic, and they just keep moving up due to high demand and still low supply. So if the 30-year fixed hits 5.75%, which it very well could this week, that'll mean the monthly mortgage payment for the average home is $1,867 higher than it was at the start of the pandemic. $1,867. That's if you're putting 20% down. It would be over $2,000 more a month if you can only put 10% down, which is a lot of first-time buyers using FHA mortgages, and they, of course, have the least wiggle room in their wallets.
Wow, so this is absolutely shocking to me. This is the highest it's ever been on record. They're talking about if mortgage rates hit 5.75%, but where they are currently on average today at 5.64, the average mortgage payment is $1,826 per month. Now, I want you to keep in mind, this is the average conventional loan with no mortgage insurance, with a 20% down payment, and they are not factoring in taxes and insurance. So that is just your mortgage payment. Once you start factoring in taxes and insurance, you're probably going to be well over $2,000 per month. Now, for the as she mentioned, for first-time home buyers or somebody who's using an FHA loan to purchase a home, they are not putting a 20% down payment. They're probably going to be somewhere from 3.5% to 10% down, and for those, on average, the mortgage payment is over $2,000 per month, because they not only have to factor in, the higher rates that we're dealing with, but they also have to deal with something called PMI, or mortgage insurance. That is an added cost to the loan if you're putting less than 20% down on a property.
We're now seeing sales fall, and reports anecdotally that bidding wars are starting to cool off. Prices usually lag sales by about 6 months, so this summer should be pretty telling on home prices.
Okay, so absolutely, it's going to take several months for this to play out and see if we're actually seeing a shift in the real estate market. We are starting to see some price softening. We have seen some decreases here and there, but overall for the broad market, it's still relatively low. There's still a huge buyer demand and still not too much in the way of supply. Now, of course, it's not all bad news. The rise in interest rates have taken some buyers out of the market, so there is a little bit less competition right now. So if you've been a buyer that's active in this market and you've made several offers, well, finally you might be getting the opportunity for things to cool down a little bit. You can be a little more selective, you can be a little less aggressive with the prices that you offer or the terms you offer, and might be able to find your dream home and get into it a little bit easier than what you may have experienced in the past. Okay, so real quick, before we wrap up the video, I want to talk a little bit more about this market. market and actually purchasing a home today. You have to remember that buying a home is not always about trying to see whether or not the price goes up or down from here, because there is no way to perfectly time the market. That's what speculators try to do. And there are several other reasons why somebody would purchase a home. Maybe they have a growing family, maybe they want to lay down some roots, they want to be in a specific school district. And it all comes down to personal finances. What the price does in the short term really is irrelevant. You want to take a much longer time horizon. You want to be considering, maybe what this area or what this market or what these values might do in the next 7 years, 10 years, 15 years. And if you're looking at it in the long term, then generally speaking, over time, real estate does really, really well, especially right now with fixed rate mortgage debt. And even though the rates have gone up dramatically, historically, they still are very low. So you got to take more of a holistic approach when you're looking to buy right now. The other thing that you want to consider is, how stable is your income? Do you have a nice financial runway? Do you have reserves? If the market were to turn down, would you be, would it put you in a really, really bad spot? If that's the case, then maybe sitting back a little bit to see how things unfold might be a better choice. Now, this is not financial advice. This is just some views and opinions that I have personally. But you can always find negative information here in the news. You can find it online. And at the end of the day, what it comes down to is home ownership is expensive. No matter what. So you have to be financially ready. You have to be prepared. Anyway, that is my take. That's the information here in this video. It is really fascinating. I hope you found the information useful. Consider liking and subscribing and commenting. We'll see you next time.